What's the better strategy to grow your wealth over time? Is it investing in real estate or building a solid portfolio of stocks? Now, I know the question is kind of tough to answer. Very few stocks would have beaten buying beachfront property in California in the 1970s and selling 20 years later. On the other hand, virtually no real estate purchase could have outpaced the returns you earned if you invested in shares of Microsoft, Apple, Amazon, or Walmart in their initial days. Timing is impossible to predict when making investment choices. But what you can do is understand each type of investment to help your money grow and create financial security. In this video today, we're taking a closer look at a number of considerations for you when choosing between investing in stocks or buying real estate as an investment. So let's get started. Number 1. Real estate versus stocks in terms of return. Getting the greatest return on investment is the ultimate goal of an investor. When owning property and leasing it out, immediate cash flow is a great possibility. Rent from real estate can provide steady, reliable cash flow on a month-to-month basis. As properties sit over time and pay for themselves through rent, eventually when the market is right, selling that property is an excellent return on investment. It can be used as needed, possibly for even more investing. Real estate is also a great hedge to inflation. As the value of the dollar decreases, the cost of living goes up. In times with high inflation, real assets tend to generate more return. On the other hand, cash flow from stock investments is not the same as cash flow that would come from renting out property you own. Most cash from stocks only comes in the long term when you sell them. Number 2. Real estate versus stocks in terms of diversification. Well, diversification is a word we often hear thrown around in the world of investment. The point of diversification is to spread out your investments through a few different avenues to help reduce the risk of loss. When diversified, if one investment fails, hopefully another one profits. With real estate, few people have the time, let alone the cash, to purchase enough properties to cover a broad enough range of industries for true diversification. But with stocks, it's possible to build a broad portfolio of companies and industries at a fraction of the time and cost of owning a diverse collection of properties. Perhaps the easiest way is purchasing shares in mutual funds, index funds, or ETFs. These funds buy shares in a wide swath of companies, which can give fund investors instant diversification. Number 3. Real estate versus stocks in terms of liquidity. When it comes to investing, liquidity means the ability to get cash out of your investment easily. Stocks are far more liquid than real estate investments. During regular market hours, you can sell your entire position many times in a matter of seconds. It may take a few days to see the proceeds, but you can get out of your investment pretty much whenever you want. As for real estate, when you own a piece of property and you need to sell it for cash, it can at least take a month before you get the cash on your hand. You may have to list real estate for days, weeks, months, or in extreme cases, years before finding a buyer. There are also round-trip transaction costs that may be up to 15% of the value of the property, 5% to buy, and 10% to sell. Number 4. Real estate versus stocks in terms of risk. When investing in stocks, you are taking your chances with other companies. As the companies you invest in do well, so does your stock. However, if they perform poorly, your investment plummets too. Your money is in someone else's hands, and you have no control over how the company operates or what decisions are made. It often turns out well, but if it does not, the frustration can run high with the loss of your investment money. In real estate investment, however, you are the one in control. As an investor, you choose which property to invest in through research and possibly with the help of a real estate broker. The beauty of real estate is that it's more than likely you have lived around it all of your life and probably gone through the buying and selling process before. Familiarity is one more benefit of real estate investment, whereas with stocks, you can often be anxious when dealing with the unknown. Number 5. Real estate versus stocks in terms of tax advantages. Investors that realize gains in the stock market will need to pay taxes on the money they earn, whereas rental properties offer investors a significant tax shelter. Homeowners may qualify for a tax deduction for mortgage interest paid on up to the first $1 million in mortgage debt. There are also tax breaks when you sell your principal residence, such as an exclusion that may allow you to avoid capital gains taxes on net proceeds of $250,000 if you're single or $500,000 if you're married and filling jointly. Operating expenses to keep the property going, repairs, mortgage interest, and property taxes are also all deductible when managing a property. Well, basically, if it's a cost of managing the property, it may be deductible. Compared to this, investing in stocks has very few possible deductions. 401ks and other tax-deferred retirement accounts do save taxes with an upfront tax break, tax-protected growth, and a tax bracket arbitrage at the time of withdrawal. Number 6. Real estate versus stocks in terms of time and effort. Compared to stocks, real estate takes a lot of hands-on work. You gotta deal with the midnight phone calls about exploding sewage in a bathroom, gas leaks, the possibility of getting sued for a bad plank on the porch, and whatnot. Even if you hire a property manager to take care of your real estate investments, managing your investment will still require occasional meetings and oversight. When you buy shares of stock, on the other hand, you are buying a piece of a company. If a company has 1 million shares outstanding and you own 10,000 of them, you make up 1% of the company. Unlike running a business, owning part of a business through shares of stock does not require any work on your part, other than researching each company to determine if it's a sound investment. You benefit from the company's results, but don't have to show up to work. Well, investing in real estate and stocks both present risks and rewards. This is why many investors prefer to put money into both of these asset classes. These asset classes could provide you with returns if diversified properly. Not to mention, even your own personality plays a huge role on how much you could get as a return from these investments. The anxiety at the same time that can come with the risk of investing and the way it affects your life may be a crucial determining factor when choosing a form of investment. So it is always important to invest in a way that makes you comfortable. Make sure you do your research and determine what you are willing to risk before moving forward. That's it for the video, guys. Thank you so much for watching. What do you prefer, stocks or real estate? Let us know in the comments below. Please leave a thumbs up and share the video if you liked it. For more videos on investments and personal finance, subscribe to our channel and hit the alert notification to never miss an upload. See you guys in the next one.